The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 29th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. Now, if you'd like to call in, but you can't, you can always send me an email. Send that to steve@tfnn.com. And inside the subject heading, if you'd be kind enough to put radio show question. Of course, if you're inside our Tigers, then, well, any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the U.S. indices and the sectors within inside the S&P 500 trading to the upside. Dow's up 312. That's about 1%. 1 at 0.6 for the S&P, or 61 points. 2.5% for the NDX 100, 262. 2% for the Russell, that's 34. Over 3% for the semis, that's 77. Trend is up 1 at 0.6%. Gold's up $4. Silver's up 26 pennies. Light sweet crude trading off at 77.43. That's off about 2%. Down 5.5% for natural gas, down at 4.43. And the 30-year Treasury is up 13 ticks, 125.10 is the print. We've got a caller on the line. Let's go to our first caller. It is John in Philly. John, thanks for calling. Thanks for holding. How are you? And Happy New Year to you.
Happy New Year to you, Steve. Very good to hear your voice is cleared up.
Yeah, I'm feeling a little bit of strength this morning. We'll see if it can last for 51 more minutes. That's all we're looking for.
Exactly. And I'm calling to give
Sounds
you
like you have a
big
cold.
Thank you to you personally, but to all the other TFNN contributors, led by Tom O'Brien, of course. Yesterday, your information on the NASDAQ indices, the NASDAQ index, the QQQs, Apple, the SMHs, the list extends longer than that, of course, about a potential bottoming pattern that you saw given your TD counts, your Tommy DeMark counts. All those got me thinking and working diligently yesterday afternoon. And then after 7 o'clock last night, took a long position in the NASDAQ 100 futures, which, of course, has worked out. But the fact that the NASDAQ 100 cash index yesterday at its lows got within a mere 40 NDX points of the November 4th higher low bottom, just to me said, hey, there's will the markets, will the NDX bottom turn and head higher? Of course, we didn't know at the time, but you did know the risk of loss was tiny. So it turned out to be a very good trade. So I thank you for your analysis yesterday on your show live. I'll just further mention Basil's been quite instructive the past couple of weeks, observing that the pullback in the Dow index tested and held its 200-day exponential moving average numerous times, And then the final piece in the puzzle that I saw yesterday was brought to us via Larry Pesavento's guest, Norm Winsky, who last week showed us that between the close of Tuesday and today's open, there was a cycle cluster, and with that decisive move lower Tuesday and Wednesday in the stock indices, that just said timing-wise, it looked like a very low-risk shot to expect a turn. So that recaps it. But I thank you personally and everybody else involved with TFNN. It's just terrific.
Well, John, you're welcome. We consider you to be a contributor, a very significant contributor here at TFNN, with all the kind information that you provide to all of the folks inside the Tiger's Den. So it's a reason, quite frankly, that people should try out the Tiger's Den. To assist you with the Qs, there is a new piece of information I can provide you with this morning. That's a new profile that is formed inside the QQQ ETF. I don't have a new profile inside the NQ, but inside the Qs, the bottom of that profile, that's the support level, folks, is 261.24. Resistance is 271.77. And I would expect and anticipate that we should see a rally that should take us up. Perhaps it takes us all the way up to that 271.77 level. The reason, John, that we should expect a 2-day rally is because that's the typical, what I'll call knee-jerk reaction time. Now, let me put over the Qs here. You'll see this on a chart. I don't know why my chart didn't save earlier, but it didn't. What we should notice here, folks, is this chart here is identifying consecutive either moves higher or lower. So obviously the black digits are identifying consecutive moves higher. And what we'll see is that we typically see a 2 to 3 bar. That's 2 days or 3 consecutive days of price moving higher. And those have been the counter trend moves out here. So today should be day number 1. We should see that tomorrow going into the end of the year. Now, do we get to day number 3? That I don't know. I don't suspect that this is a significant bottom, but certainly a counter trend move and kind of normal out there. So yesterday was on the Qs themselves was 2 days in a row to the downside. Now we should get 2 days in a row to the upside. And again, you've got a new resistance level inside the QQQ ETF, and that's at 271.77. John, is there anything else, anything that I can provide you with?
Steve, you're going to give us lots in the next 40 minutes, but you've answered my question, and once again, thanks so much.
You're welcome,
for everything
John.
you do. Yesterday was a perfect example of close to real-time actionable ideas. So thanks again.
You're welcome. You bet. And Happy New Year. And it sounds like you've got a bit of a cold, so we'll send you all of my white light and all the medication. But take care of yourself. Now, you bet. That was John in Philly. So let me just see which panel. Okay, so I'm still on the white panel background charts out here. Here is the NQ for its multiple time frames. So the NQ, we talked about how inside of, we've got another caller. We got Brent in Martinez, California. Hey, Brent, thanks for calling. Thanks for holding, and Happy New Year to you.
Happy New Year to you, Steve. Good morning.
You bet.
To you.
You bet. I wasn't paying attention to the clock. We're going right to a break, so be kind enough to hold on through this break. We'll come back. We're going to take a look at Tesla with Brent in Martinez, California, in just a few.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. You got the Dow up 305, S&P's up 59. We're on the line with Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you today? And Happy New Year to you.
I'm doing great, Stephen. How are you?
Doing very well. Thanks so much for asking. So I know you called to talk about Tesla. Tell me what you're doing and how I can best help you.
I don't have the chart in front of me at the moment, but you go on to a weekly.
Yes.
I had a completion of a AB equals CD yesterday. When it got down to 108, so I was taking the A point would be. It was a little weird on my chart, but it should be right around November 1st in the 400 range.
It is
the A point.
Yeah.
And then there was 2 different lows. I took the lower low as my B point.
Yes, May 23rd.
And then we had the retracement for the C, and then of course yesterday was the D. But
yes. So actually, it's a perfect 1-to-1 A to B equals CD pattern. What we would like to see at the end of business tomorrow, some type of bullish reversal candle to confirm that pattern out there. Price is along the left-hand side of the C to D leg of this A to B equals CD pattern. And that tells us that the move on the B to C leg has been stronger than the A to B leg. And so without a bullish reversal candle come week's end, we just might be seeing an oversold counter trend move out here. Now, if we are seeing an oversold counter trend move, there are 2 areas where Tesla is likely to find resistance. I'll switch charts. I'm going to switch back and forth between charts here, Brent. So, and to keep with what I was just saying, because it wasn't planned out. The first level of resistance that Tesla needs to overcome is going to be the daily red oscillator and change line, and that is currently printing at 123.56. Now, as you know, that number is going to change up and down, so we'll just call it like 123.65 as an example. And if you get it closed above that today, then, Brett, what you should expect or anticipate is a move up to the top of a new profile. So I'm going to switch back to the black background charts because my white background charts are not picking up the new profile. The new profile has a resistance level at 131.75. Support is 112.94. The center of that profile is 122.34, but the top is what you're really looking at 131.75 if on the daily basis, price can overcome the red daily oscillator and change line. Now, on a daily time frame, Brent, there's also an A to B equals CD to the downside that is completed or appears to have completed today. Now, the reason why I say appears is because the way that this, the smaller A to B equals CD pattern would confirm would be with a bullish reversal candle. Well, one of the bullish reversal candles would be a gap to the upside. And right now we've got a bit of a gap. Now, if price were to pull back during the day and touch the 116.27 level, that gap would go away. But right now, we've got the gap, so you've got it confirmed by the D-point pattern. That typically says you just at least get up to that oscillator and change line, which, as we saw, price was basically testing or has tested. The question is, can it overcome that level? And then if it can, then 131.75. Now, if price can close above the top of the daily profile for 2 consecutive sessions, it'll be something that Tesla has not done since September 21st. And that could then signal some type of change in trend out there. So that's what I see when I take a look at the charts for Tesla. Does that make sense to you?
It does, absolutely. That was great stuff. I appreciate it.
Oh, perfect. Okay, so the other area that we can watch inside of Tesla is on a 30-minute basis. And on a 30-minute time frame, not that I have a bottoming pattern here. I don't really need that. What we need, what I'm using a 30-minute time frame chart for, is the TD9 count breakdown level. Now, let me come back to this chart here, and I'll add additional lines. I'm just curious. Where's my indicators out here? Here we go. I'm just curious if price has been able to we go zero. Close above a TD9 count breakdown level on this 30-minute chart out here. No. So if I boy, wow, it's been quite a while. So there was a TD9 count breakdown level that formed at 10 o'clock in the morning on December the 5th. Brent, ever since December 5th, we have not seen price close above a TD9 count breakdown level. So this is going to be another key area to assist you. 124.87. That occurred at 3:30 in the afternoon. It didn't form at 3:30. It formed during the pattern. The pattern actually completed at 1 o'clock on December 27th. But now the high of that pattern, which happened to be bar number 1, that took place at 3:30 December 23rd. And that level is 124.87. And that's what you're really going to want to watch. If price can close above 124.87, it's signaling, at least on a short-term basis, a change in trend. That would then likely suggest that move up to 131.75, but it could be even more than that. But those are the areas, or those are the numbers that I'd be watching for Tesla to give you some additional signal information. Brent, is there anything else that I can provide for you?
I think that's it, Steve. I appreciate it so much. You just have a happy, healthy New Year, and I always appreciate your help.
Well, Brent, I appreciate your calls and all the support throughout the year. You have a happy and healthy New Year as well, to you and your family. And let's make sure that everybody listening at TFNN does the same. And let's send John in Philly some white light. Sound like he was coming down with a little bit of a cold there, and I sort of know what that's been like for the last 3 weeks. So not fun. So Brent, have a terrific New Year's Eve and New Year holiday, and we'll look forward to speaking to you in 2023.
All right, do the same, Steve. You take care.
You bet. That was Brent in Martinez, California. I think Dennis had some questions about Tesla as well. So, Dennis, I hope that helped answer your question with regard to Tesla, TSLA. Now, I don't think I have any other questions that I see inside of the Tiger's Den. I'm pretty sure. But there was a question earlier from someone asking about the TD9 counts. Yesterday, when we met at this time, what I shared with you is what I thought were the 3 most important charts. The 3 most important charts yesterday were the NQ or the QQQs, so just staying with inside the sector. Why? Because we had a TD9 count bottom that was forming. The SMHs, which also were forming bar number 9 yesterday, and then the technology sector inside the S&P 500. It was those TD9 counts that at least they gave John in Philly pause. He went ahead and assembled a bunch of information from a number of the different contributors with inside of TFNN, and it was able to go ahead and look for some bottom signal, as he did about an hour after the futures market had opened last night. Now, These charts here tell us that what price should do is get up at least to that oscillator unchanged line area. Inside the NQ, that level is around 11,175. I say around because that line is going to move up and down, but you can use that as a guideline. Still showing Tesla's chart. Sorry about that. So, folks, let me do this here. That was wonderful to go ahead and give you all that information and show the wrong charts. But there we go now. So on the left-hand side, you've got the NQs. We already took a look at the QQQ with John in Philly, the SMHs next to them, and the XLK. So three, really, the XLK, the largest sector within inside the S&P 500. If a market is going to bottom, it really needs to do so with both the NQ and the SMHs. So we've got that. The SMHs should target the 209 area. The NQ, 11,175. The XLK, the 126 range. I'd say 127.19 more likely. Those were the important charts out there. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow up 323, S&P's up 61, NASDAQ 102.59, the Russell's up 36. Now, this table here that I'm showing you, somebody asked the question, Steve, how did you know that those three instruments were making TD9 count bottoms out there? And there's a couple of different ways, but this chart here is one that I wanted to share with you. So newsletter subscribers get this each morning. And what this chart is telling, now this is for various instruments. I cover all 4 of the equity future contracts, all of the metals out here, oils, the notes, the 30-year Treasury, many other commodities, the index ETFs, the sectors inside the S&P 500, all of the popular ETFs that people typically call in about, and a couple of top stocks that are out there. And what this is doing is this is providing you with what the current outlook. So as you know, when you call in or you listen to the show, you hear me talk about a number of different tools out there. We use the TAS market profiles. Those help us to identify support and resistance. We use the oscillator unchanged line that helps us to understand momentum and provide us with a support and resistance level. The TD9 counts that are out there, the Rhodes momentum indicator signals, all of those are factored into the outcome of what the current market condition is. So when we take a look at the daily outlook for the ES, the NQ, the Russell, they're all bearish. The Dow is a consolidating bull mode out there. Here's the weekly outlooks, the intraday outlook time periods. And then if you take a look here, you've got daily Rhodes momentum indicator signals. So this is telling us now, the one that is highlighted, this green one, that's a new signal out there. That is for XOP. We'd have to go take a look at that and see what that means. I've also got the TD9 counts. Now, if it has a star next to it, then it tells us that that is a valid TD9 count, that the low is taking place, or the top could be a high or low. So this is the minus ones are the lows. Positive counts would be the tops out there. So here we could easily see, just by taking a look at this, at least for the daily time frame, exactly what the position was. Also gives us what the current Chapman wave counts are to the upside and to the downside. Tells you where the daily oscillator and change line is at, whether it's support or resistance, right? If it's resistance, it tells us that price is below that level. If it's support, price is above that area. The up arrow or the down arrow, that's very helpful, because the up arrow is telling you have a price oscillator above zero. That is a bullish condition. When the arrow is down, it tells us we got a price oscillator below zero out there. You've also got your daily TD9 support and resistance levels, your TAS support or resistance if it's applicable. The last time you had a TD9 count top or a bottom out there. So this is worth its weight in gold. That is one of the ways that actually, for this specific instance, that was one of the ways that I was able to identify the TD9 count patterns that are out there. So just thought that I would share that information with you. It would be helpful to you. There's another question that came in inside the Tiger's Den, and that question is from Jambalaya. It says, Mr. Rhodes, Mr. is my father, by the way, who's passed away, rest in peace. He says, please share your perspective about the Santa Claus rally this year in view of previous years and the aberrations that confounded it. So, Jambalaya, myself, you're asking about a Santa Claus rally. The Santa Claus rally, let's start with this chart here. This is the only chart that we actually need to take a look at, and that is the S&P 500. And if we take a look at the S&P 500, this is the seasonal for the S&P 500. Let me do this here. What the Santa Claus rally, the way that the people on Wall Street talk about it, is they refer to the Santa Claus rally between Christmas and basically the early part of January, say January 3rd, 4th, 5th, something like that. Well, when I went ahead, now I'm using the tool here from SeasonX, but I had manually done this type of work and went back to 1896. Well, I went back 90 years, something like that, and went ahead and created my own seasonal chart. And when I created my own seasonal chart, which quite frankly is what this seasonal chart here shows us, is that the real Santa Claus rally, Jambalaya, don't listen to the folks on CNBC or Bloomberg TV. They're idiots. They're idiots when it comes to understanding the seasonal pattern with regard to when the Santa Claus rally typically occurs. And it is not after Christmas. It typically occurs in the month of October. Usually it's the middle of October. So you just simply look towards the middle of October. Here on an average over the last 72 years for the S&P 500, that date would come in around October 26th. That is when the real Santa Claus rally takes place. So now let's go back and take a look at the SPYs. Let's go, instead of the S&P, let's just go take a look at the SPY charts out here. We'll get those pulled up. And now take a look at the so-called Santa Claus rally. We'll take a look at the daily time frame chart. When did a bottom come in inside of the SPYs? Well, that's pretty easy. We can visually see that. That also was produced inside the SPYs bottom patterns, Rhodes momentum indicator bottom patterns out here. But so the rally came in on October 13th, Jambalaya, whereas on average for the S&P 500 or the SPY, it's right around October the 26th. So I ask you, because you were kind of indicating or suggesting that the Santa Claus rally really hasn't been around this year, But that would be because of the way that the folks at CNBC, Bloomberg, or whoever else that might be talking about it on air out there are really not taking a look at what really takes place. So next year, when it comes to looking for that Santa Claus rally, you'll be looking for some type of a bottom pattern to complete sometime in October. I've seen it take place in late September. Again, you're looking for some type of bottom pattern or signal. What would that bottom pattern or signal look like? So that's a great question. Let's put up the SPY charts. We'll go back to the white background charts out here. Give me a moment. Here's the white background charts. And what do we have on the SPY? So let's get back here. Let's actually open up the daily time frame. And on a daily time frame, you can see that price was moving lower, doing it with less relative energy. That's what's triggering the Rhodes Momentum Indicator signals. There's more to it than just that pattern out there. If you'd like to learn this pattern, which quite frankly you should want to learn this pattern, just go sign up for Mastering Probability. If you do it for 29 days, it's going to cost you nothing. You're going to get an education of a lifetime. So here in the case of the SPYs, it forms a nice Rhodes Momentum Indicator bottom. It was also a buy the D point. You can see the A to B equals CD pattern out there. That looks like it was also a butterfly buy pattern that confirmed with that big old bearish engulfing candle. That then led to jambalaya, an A to B equals CD to the upside. It wasn't a perfect one, but it was close enough. You got the confirmation of that sell the D point when that bear sash candle formed on December the 5th out there. And now what do we have? Well, we might have, what do we have inside of the SPYs out here? We take a look at it. We have a swing point that took place on December 20th. That swing point had volume of 74 million shares. Yesterday, that was passed with 70 million shares, lighter volume. So you did not get a confirmed A to B equals CD to the downside inside the SPYs. So inside the SPYs, I really don't have any kind of a pattern. Now, if price did now the swing point, you can still use that swing point, December 20th, but you need to see a close below it, which you did yesterday, it being 377.85, and what you'd like to see is a close with more than, or volume of more than 75 million shares. If you got that, then you'd have an A to B equals CD to the downside. At this stage here, even though we don't have a bottom, but we do inside the NQs, as we've taken a look at, the oscillator and change line inside the SPY is change color. Now, what typically occurs is when you get a bottoming pattern, and you have an oscillator and change line that has changed colors, you will get price that will test that level. I'm assuming at this stage here, because we're going to have a two-day rally, or we should have a two-day rally, and the NQ is leading the charge as well as the semis, that we should see the SPYs get up to that oscillator and change line, which is currently in the 385.93 level out there. So the way that these so-called professionals take a look at a Santa Claus rally means what they do is they have ignored all of the historical data. And historical data says the real Santa Claus rally begins sometime in October. And what you'll want to do for the S&P, for the Dow, is you'll want to look for some type of bottoming pattern. Now, it's possible. It is possible that what we have outplaced right now in the SPYs is a significant bottom that formed that week of October 13th. Why? Because it's a Rhodes Momentum Indicator signal that is present. And weekly Rhodes Momentum Indicator bottom signals, boy, those are a beautiful thing. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Dow's up 368, S&P's up 67, NASDAQ 100, 2 6% or 279 points. Let's go to our next question out here. This one coming in from Hector and Patty. Hector writes in, happy Thursday, 2 for Tuesday out there. Glad to see you in and grinding through the cough. Yep, and so far so good today. Southern Copper and Caterpillar have identical weekly charts. We are of the opinion these dudes are resting before ripping towards the moon. What are your thoughts? Well, take a look at Caterpillar out here. That's what we've got up on the screen. Right now, as we speak, it's only 11:42. I don't know what the candle will be at day's end, but right now you're getting a confirmed on a daily basis. I know you asked about the weekly, but the daily base is confirming a potential Rhodes momentum indicator top. If this were day's end, it would be confirmed. Now, price is below the oscillator and change line at 242.15 and above the top of its daily profile, 234.42. So the overall signal would be somewhat neutral, but I would expect or anticipate that price would at least pull back to the 234.42 level. If price gets inside there, means it closes below that level, then you're looking at a move to 226 or 229. The weekly chart supports that idea, Hector and Patty, and the reason is because price has made its way up to its TD9 count breakdown level. That was at 244.33. The actual high this week has been 245.05. So price has made its way up to resistance. Daily time frame giving us a topping pattern out there. All that makes sense. And on a monthly basis, price has made its way up towards the top of its monthly profile, the resistance level at 246.69. So why does Stevie say that odds favor price going to get back to 234.42? The reason I said that was because that's what the 30-minute chart is really signaling to you and I. Here on a 30-minute basis, we can see that there was a TD9 count pattern that formed at 11:30 this morning. It failed in the very next bar. That tells us about a strong momentum move to the downside out there, and that suggests that over time, not today necessarily, that maybe what Caterpillar is going to do is go target the 234.69 level. That is its TD9 count breakout area. So Caterpillar does look like it wants to head a bit lower. You also mentioned Southern Copper. So let's switch over to take a look at SCCO, see what its charts here look like. Now, in the case of SCCO, yesterday, this confirmed a Rhodes momentum indicator top. That was a bearish dark cloud cover that formed, by the way, the bottom out here, which was a significant bottom, was a Rhodes momentum indicator bottom pattern. Again, good reason to go try out the newsletter out there and learn this pattern. Now, right now, Hector and Patty, price is still above that green oscillator and change line. And that level is 61.60. If price closes below that green oscillator and change line today, that would be 2 days below that. That would suggest a further retracement retracement with a downside price target, I would say, at the 56.33 level out there. Now, that is supported, Hector and Patty, because you are going to get a confirmed, completed weekly TD9 count top for SCCO. So I don't see where the two weekly charts really are similar to each other from a technical standpoint. From a technical standpoint, again, you've got a TD9 count top on the weekly for SCCO, and on Caterpillar, price had made its way up and tested and rejected its TD9 count breakdown resistance levels. Both of those can be signs of a top out there. The monthly chart looks very good for SCCO. So maybe what you're looking for is just some kind of short-term pullback. Now, the 30-minute chart here, let's pull this over, see what its signal is providing us. So you had a nice TD9 count top that formed at 10:30 in the morning. That was on December the 5th. What do we have right now? I don't have a ton on the 30-minute chart other than to say the 30-minute chart says that SCCO should rally. The reason that it says that is because price is above its green oscillator and change line, and it is above the top of its profile. So it may be targeting 62.37. So we got unique messages here. The 30-minute chart says I want more rally. The daily says, hey, I'm above that green oscillator and change line, so I may want to go test yesterday's high. I may want to take out that Rhodes Momentum Indicator top. But I don't know whether it will or it won't, Hector and Patty. I do know that it's in place right now. I'd be watching that daily oscillator and change line. That would be one area to watch, 61.60 out there. But it does look like Southern Copper is getting ready to pull back a bit. So I hope that helps you out. A happy new year to both of you, and thanks for all your support during 2022. LB writes in, he says, glad to see you're feeling better. Well, thank you, I am. I'm holding long-term UEC. So let's get UEC fired up here. UEC. And the question goes like this. Can you give me a rundown of where this is going? Whoa, what the heck is that? There's got to be more than one day. Reload all historical data. So I have been having a couple of, there we go. I've been having a couple of issues here. But so UEC, based on that, I need to check my black background charts just to make sure that I've got the proper data coming through here. It shows it's printed out at 386. Yeah, 386 it is. So as we take a look at this, prices, well, let me fill this in with the indicators. That would be helpful. What are the indicators showing us out here? Okay, so on a daily time frame, for UEC, which is Uranium Energy Corp, you've got price above its oscillator change line and above the top of its bearish structure daily profile. This looks like it wants to make a run for either the swing point from back here of November 15th, that's in between 401 to 420, or it wants to make its way back to the swing point from October 26th. That's somewhere between 426 and 450 out there. In fact, you could be getting an A to B equals CD to the upside. The volume from 2 days ago was 4.1 million shares. Today, so far, you've done 3 million shares. So this is actually setting up an A to B equals CD to the upside. We'll draw the A to B point out here, which is like about there, give or take, and we'll just simply copy and paste. So we'll copy that, we'll paste it out here, and what this is telling us, Lee, is that in fact price wants to make its way back to its TD9 count breakdown level at 437. And we can see how that area was tested on October 26th, on October 27th, and on November 1st. That level held as resistance. So it looks like Uranium, UEC Energy Corp, is going to make a run for that high. At least that's what the daily time frame chart is communicating to you and I. If we take a look at the weekly time frame chart, what we see out here is primarily just a sideways consolidation. A very clear consolidation pattern. So no idea whether that will get broken. We'll go ahead and draw that in for you. So we can see that the top's pretty easy to identify. The bottoms this is an easy consolidation pattern out there. So that says that that gets you to maybe about the 460 level. But again, you're going to come back, watch that daily time frame at 437. On a monthly basis, you have a consolidation with inside its monthly profiles. That's between 228 and 462. Real quickly to finish this off, 30-minute time frame. Looks bullish to me. Looks like this wants to continue to move higher out here. No topping patterns, no topping signals whatsoever. So UEC should continue to move higher. LB, I hope that helps you out. And Happy New Year to you and your family. Any other requests that we have here? Just checking by email. That's not bad. That was just a very small little hack out there. So nothing there. Inside the Tiger's Den, I don't see any request out here. Nope, just some talk about the FOMC. If there was a request in the Tiger's Den, if you'd be kind enough to repost that, that would be great. In the meantime, let's take a look at what's going on inside the markets out here. We're going to go to a break. So I got to find out what's the most important thing for us to watch during today's trading session. By the way, tomorrow morning, please join me early between 8 and 9. We'll be recording tomorrow's show. It'll be replayed at the normal time frame slot from 11 to 12. But please join me early for tea and crumpets. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Dow's up 408, S&P's up 73, and we're taking a look at the multi-time frame charts here for the NQ. Now, we don't have any kind of topping patterns or signals that are out here right now. You're in bar number 7 on an hourly basis, bar number 7 on a 30-minute basis of a TD9 count, so no tops there. The area that I'd be watching comes from the 5-hour time frame chart, and price has made its way, so I don't have a confirmed bottom pattern here. Price is making its way up to its TD9 count breakdown resistance level. And that's at 11,076.75. We're at 11,070 right now. I would say if price closes above 11,076.75. Now, this is a 5-hour chart. It's 2 p.m. that this bar is going to complete. But a close above that is going to suggest a further rally. And don't forget, at the beginning of the show, John and I looked at the normal 2-bar knee-jerk reaction time frames out there, 2 to 3 bars. We should see this rally extend itself tomorrow out there. A couple of requests that came in from Rahul. Rahul, I can't get to all of them, but if we take a look at Amazon yesterday confirmed a Rhodes momentum indicator bottom. What it also did, though, is it ran into resistance at the bottom of its profile, 85.52. That bottom pattern is still in place out there, but price needs to close above 85.52 to have any hope of a further rally out there. The weekly chart, no bottoming pattern here, but if we did get a weekly bullish reversal candle, which is not likely to happen, but if we did get that, well, I guess it could. If we did get that, then we would have a weekly Rhodes momentum indicator bottom as well, with the monthly getting back to breakout support at 81.30. That too can be a bottom. Your other request was to take a look at, he threw out a bunch of them, but NVIDIA. NVIDIA yesterday formed a TD9 count bottom, much like the SMHs, much like the XLK, the NQ, the Qs out there, all the key charts. NVIDIA should go target now. Well, let me see if there is a new profile that's formed on my black background charts. There's not on the white. The white is suggesting price should go target 158.79. My black background charts are suggesting there is a new profile that has formed. That new profile, help me out here, that new profile has got support at, it's up above 155.30. So it's actually kind of bearish. So about 155.30 is where NVIDIA should target. Folks, thanks so much for joining us here. Please join me tomorrow morning between 8 and 9. That's when we'll be recording the show live. It will be replayed between 11 and 12. Happy New Year if we don't talk to you tomorrow. Take care, folks.